Good morning, folks. It is Sunday, May 3rd, 2020, and no, I'm not going into a new delivery schedule of adding additional videos per week, but I woke up early this morning, and while my family were still in bed sleeping, I said, well, let me just watch my video from Friday and see if there's anything in it that's problematic or is going to start a whole bunch of questions. And I watched what I did with the review for Euro and cable, and I really wasn't satisfied based on what the things were stated in the Wednesday midweek review. Okay, so it's important for you to go watch Wednesday's review again in regards to euro, dollar, and pound. Okay, because I gave very specific things and criterias for certain things that led to the analysis. So in other words, in short, I outlined bearishness for the dollar. That was my opinion. I held on to that, told you that that's the goal as a developing student watching my commentaries. Okay, that teaches you to use my experience in forecasting and then utilize the tools that you learn in the core content and in the lessons that come by way of the commentaries and charter members content and price action models and trading plans, which will bring your understanding more closer to your goal as understanding and being an independent thinker about analysis. But when we look at these weekly commentaries, okay, when we're sitting down and we're looking at price action, the main thing that I want to underscore here is that you have to take notes. You have to take very detailed, copious notes, because I'm actually teaching you mentorship in these videos. It's not the 8 lessons and whatever number of lessons I gave in month 5, which is a whole lot. But the approach to using the macro view of the daily chart, not just focusing on the smaller time frames, because the smaller time frames are useful for exercises, development in terms of entries and stop management and all that. But if you just focus on that lower time frame only and not keep the context germane to the daily chart, which is where 80 to 90% of, let's just say it this way, because there's really no way for me to definitively define a percentage, because then somebody goes, how'd you get that percentage? The bulk of interbank order flow is really linked to the daily chart and the levels that are derived from the daily chart. So why that daily chart is so important, why we talk about it and it builds our bias, is because, as I mentioned in previous videos and all throughout the mentorship content, the order flow is the dance or balance between the bank themselves and the large fund traders. Okay, now there's a huge amount of commerce in global business transactions that go through and flow through Forex. Putting that aside, okay, because none of that actually has any impact whatsoever in terms of the control mechanisms that are in place for these currencies. And before I get into anything, I want to answer a question I got by email. And I've also seen some goobers on Instagram kind of make this kind of ridiculous, they believe, is an argument against IPDA even existing. And the question basically is this: how can IPDA, which is the interbank price delivery algorithm, control the dollar index if the dollar index is a basket of currencies heavily weighted against the euro? And I'm going to take you back to the same analogy that I've used ever since I started talking and teaching openly about IPDA. The central banks around the world, okay, they are all together. All right, it's kind of like the NFL, the National Football League. I think it's what I'm not a sports fan, but I'm almost certain that's what it is, National Football League. But the collection of these teams are headed and organized and ran by the NFL. Now, each one of those teams have their own name, their own quote unquote owner and all that business, but they are all very subservient to the NFL. And if the NFL doesn't like what you're doing, they're going to penalize you. Okay, so who's controlling the teams really? The NFL. And the same analogy is with the stores. Okay, if you own a store, and I used the analogy recently with a woman's shoe store. If you are the one that owns the store and the product that you're selling is the shoe, who sets the price that the customer or consumer has? The same analogy is with the stores. Okay, if you own a store, and I used the analogy recently with a woman's shoe store. If you are the one that owns the store and the product that you're selling is the shoe, who sets the price that the customer or consumer has to pay? You as the owner. So when we look at these central banks, okay, the Central Bank of Japan, Central Bank of Europe, Central Bank of America, the Fed, what people fail to realize is that there is a different tier of wealth and elitism that exists. Most people are familiar with the Rothschilds, the Morgans, and the Rockefellers. Okay, there's actually two other families that I'm not going to mention. They're going to remain unnamed here. Those five families actually are the owners of all the central banks. They own the banks. Okay, so while they may wave a flag and say we're the Central Bank of Japan, we're the Central Bank of Europe, we're the Central Bank of the United States, the Central Bank of Canada, all of that, Australia, New Zealand, they are all privately owned. They have no affiliation really with the country that they wave the flag for. So the question is answered in regards to how can the dollar or Dixie be manipulated or controlled by IPDA if it's a basket of currencies and heavily weighted in the euro. Everything is controlled down to the pipette. Okay, it's controlled by time and price, and the algorithm works together across all the banks. It's not just one central bank that runs IPDA. Okay, IPDA is the same algorithm throughout all of the central banks. So it's not a question of how can the Dixie be manipulated if it's a basket of currencies and blah, blah, blah. It's the same people running all of it. It's the same owners, the same store owner, okay, that is controlling and manipulating all of these currencies. All of them. So this video would literally take me months to go over, and I'd have to talk about things that I'm not personally going to touch on because I like my life the way it is, and I'll just leave it at that. But there's lots of things that you can do online and research, because there's really good documentaries that touch on the Morgans, the Rothschilds, and Rockefeller family. But again, there's two families that no one ever talks about, and those two families, let's put it this way. You hear that Jeff Bezos is the richest person on the planet. No one's ever had as much money as him. Okay, I'm going to tell you that that is the biggest bunch of BS in the world. Jeff Bezos is on welfare compared to the Rothschilds, Rockefellers, and the Morgans, and the two other families that will remain unnamed. Okay, Jeff Bezos doesn't have, and Jeff Bezos could not tie the shoelaces, okay, of these central bank owners. The Federal Reserve is not federal in the sense that it is part of the United States government. It's the same as a McDonald's. It's a privately owned company. There's nothing federal about the Federal Reserve or the Central Bank of the United States. It's just been told over a period of time that that's our government bank, and it's not. We as citizens are subservient and slaves to that particular that central bank. But that same central bank and its owners are the same central bank owners of New Zealand, Australia, Japan, Europe, Canada. It's just football teams, folks. They're just jerseys, but it's the same official organization, but it's owned by these slave masters. Okay, they're taskmasters, and they indebt societies, and that's why they promote wars, because the wars will ultimately lead to more of their central banks, and then they put more slavery on other nations that don't presently have central banks in them. Okay, so it's not a question of can the Dixie or dollar index be manipulated. It's just a matter of understanding why it is, because it's all part of the same cabal. So hopefully that's answered that question. I'm sure it's going to open up more questions for you. And for others, it'll be like, oh, it's too much conspiracy, whatever. Accept my answer as it is, because I'm not going to touch on anything deeper, especially the other two families. I'm just not going to do it. Okay, but just know that the algorithm is the same across all central banks. That's why my content works on all of them, because it focuses in on specific characteristics that algorithm shows itself over and over and over again doing. And the question is this, which is going to be, especially for the new people, well, if I'm teaching it, aren't they going to change the algorithm? No, they're not going to change their algorithm, because it works. It's absolutely been the way that the markets have been working since they opened up. All of these things were actually done by manual intervention. Okay, people that were unseen, they were the real market makers. Okay, not the JP Morgans and the big, you hear about them now. It's like they were the trailblazers of the financial markets. Again, same analogy with Jeff Bezos. The people you never see, the people you're never going to hear from, you're never going to learn about. Okay, they're never going to stay on the stage for people to look at. They don't care. They want other people to get all the attention, because they're sitting there quietly making an absurd amount of money. Okay, trust me, Bezos from Amazon, as rich as he is absolutely broke, poor. He's a pauper compared to the central bank owners. That kind of money they have is unfathomable, and they aren't in the limelight. They don't care what people think. They don't want to be seen. They don't want to be talked about. But there's a lot of people that have done some really good research and documentaries on them, and a lot of it has to do with the Bilderberg meetings, and it has to do with planning and strategy with how the macroeconomics are going to basically move in a specific direction. And some of those things are allowed to get into public eye, because it seems like their philanthropy is commendable. It's held in high regard. But neither are they good people, or are they really vested in the betterment of the human society, because they're not. The rule and reign is what they want to do. And that's why I don't talk about that much, and that's why I walked away from that stuff, because I didn't want to be a part of it. And that's why I never talk any more than what you see me go to. I go to just a specific threshold, and I'll never go beyond it. But these people control everything. So if it doesn't satisfy your inquiry, just know that I have reached the boundaries of as far as I'm going to talk about in regards to how I understand what I know, and the people that put it out there and designed it and put it in play. And it's in practice in every central bank. So it's not just the dollar. And just because it's a basket of currencies, it's okay. Think about it like this. When I teach you the idea of the euro pound, okay, the euro pound is like if you're spinning the roulette wheel at a casino, okay, you can bet on red or black. But what would upset that? Green. Okay, so the euro pound is used to offset and upset what would otherwise be seen as a bullish or bearish dollar, bullish or bearish euro, bullish or bearish cable, Okay. What messes that up and upsets it is the cross between euro and pound. So it's not just enough to say, am I bullish, bearish on dollar, or bullish, bearish on euro, or bullish, bearish on British pound. Once you come to that conclusion, then you still have to consider what's euro pound doing, because if euro pound is likely to move higher, that could upset the analysis that you arrived at from the bullish, bearish dollar or euro or cable. And then you determine also if the euro pound is likely to move one direction or the other. That in itself is proof that they're controlling the crosses to get to the majors. The same thing that would be going on inside of the basket, quote unquote, of the dollar index, which is a collection of currencies heavily weighted with the euro. How's that any different than what's being used when they manipulate euro pound? Nothing. They're just holding the other pairs that make up a lesser degree of the dollar index. No different than the euro pound. It's the same thing. They control everything. They are the storefront owner. The currency is their product. They're selling the currency. And it does not matter to them if one country is doing exceedingly well and their currency is going up while other currencies are going down, because they're still making money regardless. It's their product. It's all owned by these same 5 families. Okay? So try to ignore stupidity online, because the people that are on Instagram are all stupid. They're all idiots. They have no idea what they're talking about. They don't even make money profitably. These people have no idea. And if you look at some of the responses they were giving me on my posts on Instagram, they would look at my charts and say, oh, he's only made 4 pips. These are open positions at the time I took the screenshot. I'm not championing a 4 pip trade. So try not to get wrapped up into social media. I'm not saying don't go on Instagram and don't go on Twitter. If you think you can look at that stuff and filter out a lot of the BS, then go right ahead. I'm not trying to hide you from finding something that someone's going to reveal about me, because I'm out here doing whatever I do all the time. And especially people here, you see exactly what I expect in the marketplace. I'm co-signing every Wednesday and weekend before the moves happen. So I'm telling you what I believe is going to happen. I tell you the levels it's going to most likely be traded to. I'm telling you what the likely setup is going to be before it unfolds, and then you study it using the information you've learned. If I tell you what it is, okay, in regards to what makes IPDA exist, and then I show you patterns to prove it, because it's not randomness, it's not harmonics, it's not any other thing out there in retail that ends up doing what we talk about in price. There's no other way for me to know what I know and see the market, as I'm going to show you here, okay? There's no other reason for the market to be doing what it's doing if it was not utterly controlled. And if it's controlled, there has to be evidence of it. And I show you that with my content. Okay? It's not vague. It's not ambiguous. It's specific. It's a specific criteria. It's a specific mechanism that takes place. And those that want to oppose the idea that IPDA even exists, it's easy for them to see that argument because they don't understand what you're learning here. And it also shows the infancy they have in their understanding of the financial markets, because they still hold true to the buy and sell strength and pressure of the marketplace. They honestly believe that there is a counterparty to every single tick in the marketplace. Someone took the other side of that trade over here. And if 50 billion traded here, then 50 billion got out. It's up there. And that's the biggest lie that's going on right now. It doesn't work like that. It does not work that way. They can print a market price, okay, and you have nothing to say about it. Traders buying and selling have nothing to do with that price that's offered as a tick. Nothing. Absolutely nothing. That's what people don't realize. They control price. They absolutely can make a market, print a price, offer that price. Here it is right now. It's above 20, 30, 50 pips above. No trades taking place. It's just that's the price right now. And then what happens is market orders are flooding the market because of the liquidity that's been tapped in the form of stops. Now, traders didn't want to trade up that price. It went beyond their limit order or their stop loss or their best entry ideal scenario. But because it prints there, who set that price there? The central bank. It's not orders that took it there. So all of that can be seen, perfect example, with the Swissy and the euro when it was depegged. Go back and look at it. Was it a trade that caused that? No, absolutely not. Nothing could have protected you from that fallout. That is a swan event. And we have more of those types of things coming. And that's why I'm telling people all the time, we are in waters that are very dangerous right now. I know things that I'm not going to talk about here, not because it will make you a super trader like me, but because I'm not allowed to talk about them. Okay. I had a question posed to me when I said that I can't talk about certain things. Who controls me? Who handles me? Okay. And I'm under an NDA just like you are. And also, I don't feel comfortable or safe talking about everything that I know. So I have to be very careful how close I get to what I know that you aren't supposed to know. So, and I know some of you are going to get all ruffled up by that. Oh, you promised that you were going to teach everything you know. No, I promised I was going to teach everything that I'm willing to reveal. Everyone knows that. Everyone knows that. When I stepped out and I said, listen, you think you understand the marketplace, but you have no idea what you're talking about. And it was directed at baby pips. There's about 12 different people in there that thought they were smart and they weren't. None of those individuals over at baby pips, and nobody on Instagram and nobody on Twitter. And they can talk about being market makers from Goldman Sachs. They can talk about how they ran the old X fund over here. None of these people are learning, or I'm sorry, they don't even know what you're learning. And I prove it exists every single week. So again, if you are opinionated, very strongly opinionated about things can't be a certain way and they can only be this way, you're going to have a real hard time here. A real hard time. Because as I mentioned before, just recently, I'm going to ruffle a lot of feathers. And if you stay here long enough, I'm going to offend your treasured beliefs. Not just in the marketplace, but in other things too, but predominantly the market. That's why most educators don't like me, because it's not arrogance that they see. They see absolute confidence, because I know what I'm going to be able to do in this marketplace. And I also know the limitations of where, okay, my foresight is being distorted right now because of something that's going on in the marketplace. So when that happens, I know very clearly I'm not going to be able to see their hand. So if they're hiding their hand with chaff, market moves that just simply don't make any sense, then I take a step back and I wait for them to go right back into their normal business model. And the normal business model is what you're learning in the mentorship. So it's not important for you to know every other thing that I'm not willing to teach, because again, I want to live my life safe and comfortable and not have people messing with me like I've had in the last 10 years where I have had threats to my life. Okay. You guys don't realize what I have and what they're afraid I'm going to share. And that's why I know they're in here listening to this, and they're waiting for me to cross that threshold, that line that I should not cross. And as much as everything I've shown you thus far is incredible, because it transcends everything else out there. It doesn't look like anything else. It might look like it because I have a box on a chart, and then right away someone's going to say, oh, he's trading same side in supply and demand zones, and it's nothing like that at all. Oh, he's trading Wyckoff. Wyckoff just confirmed something I had already seen, but I take everything to a precise degree that Wyckoff could never come close to. And I'm not trying to disrespect the old man, but the point is, everyone sees something here and they right away think that they understand it all. Or it's a misnamed thing, it's a renamed, it's a repackaged. And it's nothing like that. Nothing like that. And that's why I challenge everyone that if you have those views, especially if you're new, and you think that my market maker buy model and sell model is just purely Wyckoff, you're missing an incredible amount of insight, because what I teach with these models, it's not seen in Wyckoff. Okay, it's not taught there. Just like the IPDA algorithm, there's things in the marketplace that repeat over and over and over again, and they repeat with such a degree. And yes, your chart is not frozen. I'm still sitting on the cable chart. Okay, the signatures that repeat over and over again, they are the basis to how markets are made and then booked. So what do I mean by that? A market is made by a narrative. Okay, what's the narrative? Well, the high is going to be this high and the low is going to be this low. And how are we going to start the day? Is it going to be an initial run higher or an initial run lower? That's the narrative. That's it. That's as simple as the algorithm works from a programming basis. I know that much and I can talk about it that much. But what pieces fit together on time, you've learned or will learn in the mentorship. The times when they disrupt the algorithm, and there's times that it happens, in like what we've seen recently, the pandemic stuff. It could happen with a war, or it could come out of nowhere like a black swan event where they depeg the Swiss and euro, and the market just collapses. And it moves hundreds and hundreds of pips instantaneously. And nothing can protect you from that. That's the underlying risk. Every time you trade these markets, the foreign exchange can move like that, and you're out thousands of pips before your order would ever be executed on. So that's why you have to understand over leveraging can kill you. In the stock market, it's the same way. What keeps a stock market from having a stock one moment being at one price and then be marked down $50? Nothing. The market maker that sets that price. See, you believe the story that these markets are free and they're controlled by the buyer and seller. We control the buying and selling and pressure behind all these movements. The bears are in control. The bulls are in control. And it's neither. It's the taskmaster that's in control. They set the price. They just let people believe that their nonsense is what's making price go up and down. Their indicators, their favorite chart patterns, and all of that stuff is a facade. So please don't fall into the trap of believing that these markets can't be manipulated, and the collection that makes up the dollar index can't be manipulated as well. All of it is the same algorithm. All of it. It's all running on the same algorithm. Simply the same thing. The only thing they're doing, okay, is manipulating the prices to allow the other currencies to do what they want them to do. That's it. That's all that's going on. So, no, it's not impossible for them to control the dollar index because it's a basket of currencies. There's no difference between that and the triad that's used between the dollar, the cable, and the euro. Isn't that a basket of currencies that we come out with a narrative? And then we include what? Euro, pound. Well, that's a currency in and of itself, right? So isn't that a basket of currencies we're working with? We have a composite between euro and cable, which makes euro pound. We have the individual euro dollar, pound dollar, and then the dollar itself. Isn't that a basket of currencies? And yet we still can forecast and see with a great deal of visibility the strongest likelihood of where the price is going to go. So how is it hard for anyone to understand and believe that what I'm saying, here's the thing. The people that say, oh, this IPDA doesn't exist because I can't Google it. Right. Just like you can't get the last two names of the 5 families that run all the central banks and own them. You hear about the Rothschilds, the Morgans, and the Rockefellers, but you do not ever see the last 2 families. They're the ones running everything. The Rockefellers is just like a Jeff Bezos, a Bill Gates, the rich people that are allowed to be out there. But the 2 other families, they all work under them. You're not going to learn about them. I'm not telling you about them. You're not going to see them in documentaries. It's just the way it is. That's who runs this world. Those people are what I want to stay away from. That's the reason why I don't do what most people want me to do. That's the reason why I don't teach everything that I know. Because these people can erase me. Can I make it any plainer than that? So looking at the British pound, we're going to start there. The idea is we were looking for price, and I outlined this on Wednesday's video. The high in here, right above that, we were looking for buy side liquidity. That was the draw on liquidity here. So the belief was, or the narrative I was trying to have you understand, was before we saw Thursday's price action on Wednesday, this is what we were looking at. Okay, that was the chart. And I said the buy side liquidity resting above here, that's the direction, that's the bias, that's what I want to see price draw to. But as you'll learn in the content, there is an hierarchy to the PD arrays. And PD arrays are like bullish, bearish order blocks, mitigation blocks, fair value gaps, rejection blocks, and vacuum blocks, and old highs and old lows. And there's an hierarchy to where they are above and below price. So when we have this high here, okay, the highest form is the liquidity that would be resting above the old high. Okay, so it's the old high, then the rejection block. All right, so the rejection block is always going to be the highest closing price inside of a swing high, and it's the lowest closing price in a swing low. All right, so every turning point in the marketplace, you always want to look at, if it's a swing high, find the highest up close and the lowest down close in swing lows. That price is very, very sensitive. If you're underneath a old swing high, like we have here, and as I outlined on Wednesday, and we expect price to run above this high, that is your best case scenario. You always want to have an order in place to take something there, should it trade there. All right, that's always your best case scenario. But you have to know where logical exit points are to scale or exit entirely, because you may not get your best case scenario exits. As I mentioned in the previous recording, I don't hold always for the best exit. I'm sometimes 10, 15, 20 pips ahead of my best case exit point because I want consistency. I want continuity in my ability to harvest the pips and not just say I can get out at the highest high and get in at the lowest low and do this all the time, because no one can do that all the time. No one can do that, okay? Because there's going to be always the likelihood of manual manipulation, and the algorithm can always be disturbed, okay? It can always be overridden. And usually that's done with like non-farm payroll. They always go in manually with that one. The FOMC rate announcements, they always go in manually at that moment. And anytime there's a war or like the depegging of the euro and Swissy, those types of events, they are a manual disturbance to the algorithm. Otherwise, it's always artificially ran. It's an AI. It just always runs. It's always doing what I teach you it's doing. Okay, that's the signatures to it. So with that said, we were bullish. We want to see the run above this high, but breaking this swing high in here down, is there a fair value gap here on a daily chart? No. The order block is the butt end of this candle, or the open at 25.02. That's not of any interest because we already seen this candle trade to a high of 24.85. So are we really interested in 15 pips? No. The mean threshold of this candle will just rough 25.60, okay, or 25.65 we'll call. And it may not be exactly that, but the way you would determine it is the low or the open to the close, the body of the candle, measure that and split that in half. That number is your mean threshold. So that would be a pretty good favorable level, 25.65. Okay, so that's a nice objective to scale out at if we can catch a long. So how do we flesh out the long? We go into the lower time frames using what I gave you on Wednesday's video. But in addition to the mean threshold, we have the rejection block. Okay, so the rejection block is the closing price here at 26, 27, and 4 pipettes. All right, so if we go into the 15-minute time frame, the 26, 27, and 4 pipettes level, that's your rejection block on the daily chart. Here is the 29th. Here's the fair value gap. Here's the order block. I said there's a trend line in here. They're likely to take it above this short-term high here, and if I was making the market for it, I would do that and then run it down and pick up the orders at the fair value gap after midnight. Go back and listen to the video. Look, there's thousands of you in here. Okay, there's thousands of you here. I know you download the video. It's in your hard drive. Okay, I did not have the ability to go into your computer and change what I said there. Okay, listen to what I said, and then now look at what I'm showing you here, because this is what you are supposed to do after the fact, but you're also supposed to be looking for this going forward. So I'm killing two birds with one stone here. I'm showing you how to annotate your chart, so that way this would be like a journal entry for you. So I'm doing your work for you in this instance, but I'm also proving what I showed and outlined on Wednesday is exactly what IPDA does. Now, the people that watch me do what I do and the results I'm sharing, I shared in last year, and I've already done just in last week. I prove to you here that I know what's going to happen in the marketplace. There are times when I don't know, and I'm honest. I'll say, I don't know what's about to happen right now. I need more information, and I have to wait. And some of you lose your mind over that. You should know everything, and I'm human. There's times where I cannot get a read on IPDA, so when I'm like that, or when it's like that, and the conditions are like that, and circumstances dictate that, I will tell you, I don't have it right now. I'll have to wait. And it doesn't always line up with our schedule of Wednesday video production and sharing and the weekend. So I may require another day's worth of information that will be outside of our schedule of making videos. So I'm not going to deliver signals, but when I see people claiming that I'm doing something like using a rented MT4 server, whatever, I mean, there's always going to be something. But the people that are here see the facts, and the facts are this. I called the cable move to prove that I had every intention of trading it the next day with this insight. And listen to the details of Wednesday's video, and you'll see exactly what I'm showing you here is exactly what came to pass in the marketplace. Okay, when I tell people I know the daily high and low before it happens, okay, I had a discussion with Chris Laurie one time, and I told him, I said, listen, I've discovered the way of determining the daily high and low before it happens in these foreign currencies. So I know that these are 100% manipulated. If you were to sit down with him and ask him point blank, do you believe that the interbank markets are controlled and manipulated, and the previous high, I'm sorry, not the previous high, but the next day's high and low are predetermined? He would tell you no. He doesn't believe that. Okay? And that's what separates me from him, because I know it's fact and I'm able to teach it. So Wednesday's video is proof that Thursday I gave you the low of the day with the direction, And I told you the narrative before it happened. And it had nothing to do with harmonics. It had nothing to do with supply and demand. Had nothing to do with Elliott wave. Had nothing to do with Wyckoff. Had nothing to do with support and resistance. You get where I'm going with this, right? So let's go into it. I took your attention to the fair value gap in here. I said that there's a trend line here. They're going to upset that, and we're going to probably run this high. If I was running the market, making the market for cable, I would do this. I would run this high here, break the trend line, and then come back down to the fair value gap after midnight, and then rally it into the higher, reaching up into the old high. All right, now watch what happens. Fair value gap and the order block. Price breaks the trend line. When does it break that? After it does what? Runs the rejection block here. Look at the closing price here. 124.82.6. So it's got to go over 82.6. Does it do it here? 84.8. So your rejection block kicks in, boom. We don't care about the tail or the wicks because that's always going to be slightly different across every broker. We want to focus on the bodies of the candle. So this high is essentially ran. That's why I teach the rejection block. So it runs that high. And I guarantee you, if everybody was to be in the same room and they had different brokerage firms, everyone's high on this particular candle is not going to be 84.8. It's going to be something different. Price breaks the trend line, comes down to the order block, stabs into the order block, and then watch. Here's midnight the next day on the 30th of April. The Judas swing is hissed, dropping down exactly inside of the fair value gap. That is not a demand zone. Okay? It's not Wyckoff. It's not the spring. It's not jumping the creek. It's not breaking the ice. It's not doing any of this nonsense. Okay? It's going to right where the algorithm that I teach. Okay? This is mine. No one else is doing this. No one else calls this stuff. No one out there says what the daily highs and lows are going to be before they happen. I can do that. I can stand in front of a court any given day of the week and sit down and tell them, I know what this is going to happen in the Swissy, the Euro, the cable. Okay? I can stand in front of a judge and do this and prove I can do this. And that's why I stand on Instagram telling everybody else they're fake because they cannot do it. And they may put IPDA in their marketing stuff, and they cannot do this. I can. And there's thousands and thousands and thousands and thousands and thousands of you that now can go right on social media and say, I am a fake, fraud, liar, and that I can't do it. Or can you? You can't. You can only say, I've witnessed it. I've watched him do it. Not just once. Multiple times. Every time that I want to go out here and prove these nimwits, okay, are stupid. They're fools. They have no idea what they're doing. They have no idea what the price is going to happen in the chart before it happens. But I'm teaching you that here, okay? So a lot of these new guys that are coming in, they're all coming from the IML group, okay? And I know because I can see where you come from. And a lot of you use your own names on social media. And when new members come in, I have two of my staff go in and see if we can find you on social media. And a lot of you are coming from IML. And some of you have been very honest with me, saying you came from that crap and said what they teach is garbage and none of them make money. And I've proven that also. I put a bounty out there. None of these people make